Welcome. In this video, can Xcn coin explode at any moment? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. An overview of the chart reveals a rising trend line that has a very stable and strong structure. This ascending trend serves as a support line that the price has touched many times in the past and has given strong upward reactions after each contact. As of now, price action is hovering quite close to this trend line. Such contacts, especially in technical analysis, are among the regions where buying opportunities intensify and investors carefully monitor. This is because contacts with a long-standing rising trend line often result in a strong rebound, which can lead to new highs in the market. The fact that the price has retreated to this level can also be considered as a natural and healthy correction process in line with the uptrend. Continuous upward movement in a straight line is rare in the markets. Usually, such movements occur step by step in line with the trend. In this context, the price touching this important trend line again is a backdrop for buyers to re-emerge and for market strength to recover. If the price finds support at this point and shows an upward bounce, this can be considered a very positive signal for both short-term and medium-term buying positions. Such rising trend lines are also interpreted as a psychological confidence zone for investors, because the fact that the price has found support from this trend line many times in the past increases investors' confidence in this level. With this confidence, it is expected that there will be an increase in buying demand every time the price approaches the trend line. A similar pattern is currently in place. The price is once again close to this strong and solid uptrend line, and an upside reaction from here could spark a new bullish wave. If the uptrend continues, it is possible that the price will test the previous highs and then break above these levels to make a new high. In particular, uptrends that start with reactions from such trend lines are usually strong in terms of momentum and reinforce the upward direction perception in the market. In this case, optimism in the market increases. Investors' open positions with confidence in trading volume accelerates upwards. The current technical structure on the chart also supports this. When the price hits the rising trend line, it is usually supported by upward pressure from below. This pressure means that buyers are gaining strength and selling is decreasing. Therefore, an upward bounce from this level would be a very healthy and expected development in terms of technical analysis. In addition, an increase in volume is usually observed in movements that start with such reactions. This increases the permanence of the upward movement. In addition, looking at the current market structure, the fact that the overall momentum seems to have weakened but is still in the positive zone further strengthens the bullish prospects. The fact that the price gathers strength with horizontal movements, especially during the contact with this rising trend line, may be a harbinger of a new bounce. This is because such horizontal consolidation structures usually represent the calm before a big move. If the price finds support at this point and starts an upward move in line with the trend, it would not only be a short-term bounce but also a strong confirmation that the trend continues. This would be a reassuring signal for investors and would boost optimism in the market. Moreover, a move starting from this point would be likely to target previous highs. This brings a very strong return potential. But we can't decide the analysis with trends only. Let's look at other metrics. Stay tuned. Looking at the chart from a short-term perspective, we see a very organized and instructive example of the Elliott wave theory. At the moment, we can clearly say that we are in the second wave phase of this theory in terms of price structure. In this process, where the first wave is completed and the correction phase of the second wave continues, the fact that the price finds support at certain levels and prepares to start an upward movement again by taking strength from this support can be considered as an important sign that the third wave is approaching. According to Elliott wave theory, the third wave usually represents the strongest and most aggressive rise. This is the period when market participants become increasingly optimistic, investor confidence gains strength, and volume increases significantly. Therefore, the third wave is a critical phase not only in terms of price action, but also in terms of market psychology. Given the current technical structure, one gets the impression that the second wave is almost over and favorable conditions are forming for the beginning of the third wave. Especially when we look at the Fibonacci expansion levels, we know that the third wave usually expands by 1/618 to 272 times the first wave. This technical rule is a market behavior that has been repeatedly tested and confirmed by historical data. Therefore, it is quite normal to expect that the targets of the third wave in the current pattern will be located between these two Fibonacci levels. If the price starts the third wave, the probability of reaching these targets will be quite high, which will offer a serious positive potential for investors. In the current second wave phase, the price is in a natural correction. This correction wave is usually characterized by profit realizations and temporary indecision following the first wave that occurred earlier. But second waves often offer investors great opportunities, because in such corrections, the price gives the opportunity to buy at lower levels, and considering the potential of the third wave, these levels are considered to be very advantageous entry points in the long term. Looking at the current price action, we see that the second wave is now starting to weaken and is following a flattening trend. This type of flattening is usually considered as a power gathering phase. In other words, the market is gathering its energy, re-establishing the balance between buyers and sellers and preparing the ground for a new direction before moving into the third wave. In this context, this short-term pause may also be setting the stage for the start of a major move. Technically, if the third wave reaches the 618 Fibonacci extension level, this will both confirm the strength of the current trend and further highlight the upside potential of the market. A test of the 272 level would indicate that this wave is taking place with exceptionally strong momentum. Especially in such third waves, the price breaks through the resistance levels one by one. The trading volume increases, and a general bullish perception is created among the market participants. Also, psychologically, third waves are very important, because the first wave often starts as an unnoticed, silent rise. However, the third wave, which follows the second wave, is the period when the market starts pricing in a serious upward trend. During this period, positive news in the media increases. Social media starts talking about the coin or stock. Investor interest escalates, and this pushes the price even higher. This is exactly why third waves form the heart of the uptrend, both technically and psychologically. Looking at the chart from a general perspective, it is quite clear how the Bollinger Bands relate to the current price action. The Bollinger Bands, which are often used in technical analysis and are very important for monitoring volatility, are currently quite narrow, almost parallel to each other. This kind of narrowing is a rare occurrence in the markets, but one that should always be carefully monitored. This is because these squeezes are usually considered a harbinger of a high-volume, sharp, and directional move. The current chart structure suggests that such a move could begin very soon. Bollinger Bands are basically calculated based on the standard deviation of the price, and are therefore very effective in detecting unusual price movements. In such scenarios where the upper and lower bands converge, we know that the market is in a decision phase. As the price moves within a certain range, the bands get closer and closer together, which is called a squeeze. The longer the squeeze lasts, the harder and more decisive the subsequent move is expected to be. In this context, the current narrowing of the bands may herald an important breakout. Such a tightening of the bands indicates that market participants are struggling to make a decision in a certain direction, and that an equilibrium has formed at the current price level. However, it is important to know that this equilibrium is not sustainable. Bollinger Bands allow us to see the compression. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.